This conference will now be recorded.
To see you coming early morning, very impressed. One of my very nice and
my question to you is
favorable video.
that in today's generation, people think that sadhu sant don't hote and all these things. So, but what my question is, sir, still you manage to motivate thousands and crores of people worldwide. What keeps you motivating? मैं तो भूमि नहीं लगा था not at all, small person. In Sanskrit, there is a verse which says "Mukam karoti vachalam." Even a dumb man can speak. Panghum langhayate girim. Even a lame man can cross a mountain. Yat kripa tamaham vande Shri Guru Dinataranam. It's by the grace of Shri Guru, thank God, that one can do what we are doing. And therefore, if you ask me what is my motivation to keep going, I don't even think I'm inspiring millions or crores, as you said. People are watching and people are hearing. It's not my knowledge. It's the knowledge coming from God. It's the knowledge coming from my Guru and so many other monks in the monastery from whom I learn. I simply act as a microphone. A microphone simply amplifies the voice of the speaker. So if there's something that's motivating people, it's not me. It's the knowledge and the power of that grace that is behind me, which is unseen to your eyes. You can't see that, but that's the life that I live. When you don't see me on screens, I'm in a monastery in a small little room. Every morning, practicing my spiritual sadhana. Every morning, connecting to God through the chanting of the holy names. Every morning, I sit and listen to the other monks. I'm not only speaking, I sit there, I hear others, I learn from them. And I'm tremendously inspired by the picture that I showed you, Srila Prabhupada, his life. I'm tremendously inspired by his example. And of course, my Guru Radhanath Maharaj, who tirelessly keeps on going. And so, if there's anything that motivates me, it's my chanting, it's my hearing, it's the company of my Guru, and other like-minded monks. That's what keeps me. So we have that. Thank you very much.
What is very important in life is having the right company. If you have the right company, you can cross mountains. If you have the right company, there is nothing called the word impossible. Right? So on that note, let us start the revision. How many of you have revised? Lovely. Lovely, Vikesh bhai. Nice to see your motivation. Avinash sir, also your motivation. Good. Good, Srivastav sir. Keep it going. Lovely, Sudhanshu sir. I've seen a big change on you. Good confidence. Lovely. So what are the two types of volatility? Historical volatility and implied volatility. Measure of dispersion of returns. Hello, Dr. Saab. How are you? Dispersion of returns over a given period of time. We saw Virendra Sehwag, average score. How much is he scoring, more or less than the average? That dispersion from the average through the method of standard deviation is called historical volatility. The higher the historical volatility, the more volatile will be the security price movement. We did that example yesterday. IndusInd Bank. Right? Two stocks, ITC and IndusInd Bank. The one in blue is IndusInd. More volatile. Less volatile is ITC. Right? So we should understand that volatility has nothing to do with profitability. A stock which is low volatility can be more profitable with a stock which is high volatility. So let us not confuse volatility with profitability, right? So what are the purpose of volatility? We discussed that. You can find the trading range for the next day, the next week, the next month, or the next year. Through the standard deviation, when you know that 600 is the close, 2%, you know the upper band as well as the lower band. So you can get to know the trading range, right? Similarly, if you know the annualized volatility, you can get the trading range with the help of that annualized volatility. What is the formula? Avinash sir, what is the formula? Annualized volatility equals to daily volatility into what? What is the formula? Lovely. Is this making sense? Am I clear? Annualized volatility equals to Ramakrishna sir weekly volatility into what is it? Lovely, square root of 56. Annualized volatility equals to monthly volatility into square root of 10. Lovely, Yashbhai, lovely. Are we clear with this formula? All of us, thank you. Now, what is the distribution? When I'm plotting the various ranges, any instrument closes. In the case of Nifty, Bank Nifty, we did that example 0 to 0.25, 0.25 to 5, 0 to 0.5, 0.5 to 1. We saw that the number of instances within the average between 0 to 1 and 0 to -1 was higher. As we started moving away towards -2, -5, +2, +5, the number of instances reduced. So in a normal distribution, we saw the number of instances within the average range will always be higher, and as we move towards the extremes, the number of instances are reduced. So this is basically called a bell curve. This is basically called bell curve. Am I clear with this? Good. We plot the number of instances, the closes between the various range. The number of instances, the close is within the average is high, and as we move towards the far end of the curve, it is noted that the close instances are reduced. This is called a bell curve and happens in normal distribution. So distribution curve, one standard deviation, 68 to 95, 399.7. 1 is 68, 2 is 99, 95, 3 is 99.7. Right? Now, what do you mean by 1? You remember the Tata Steel example, 600. So within 612 and 588. 68% of the chance it will close. Please understand, it can go higher or lower, but it will close within this range. Am I clear? It can always go higher, it can always go lower, but it will close within this range. 2 standard deviations, 624. 576. Am I making sense? Am I clear? 3 standard deviation, 636. 12 into 3, 564. So 99% it stays here in the next trading days to closing basis. Right? Good. Hello Shazad Bhai. How are you doing? 68, 95, 99.5. They call the black swan event. Any questions regarding historical volatility? Are we all clear with this? What is implied volatility? Market likelihood of a change in security price. So we all know implied volatility is one of the parameters which decides the theoretical price of options. It is inside the price of options. It captures the market anticipation of future price movement, the likelihood of the change in the security price. It is always coming from the current price of options, and volatility is the benchmark. That means with respect to future events and expectation, what movement can be expected. It is a leading indicator. Why? Because any change in the option price will be captured by this matrix. As we discussed, the Prime Minister addressing the nation, there is uncertainty. Rajesh Bhai, historical volatility, did you see the statistics? This is the statistics. 612 and 586. What is the strike rate? 68%. 624, 576, 95. That is why we use the statistics. This is the basic statistics, probability theory. Good. Implied volatility is more accurate. Why? Because whenever there is an event or a change in expectation of future price movement, it will be reflected in the implied volatility percentage. Right? Historical volatility is past data. Right? So what are the major factors which affect implied volatility? Demand and supply. When there is an event, the demand goes up. So option premium goes up. Am I making sense? Right? Implied volatility increases in bearish market and decreases when the market is bullish. We discussed that. I will take you forward from there. How do I calculate? One standard deviation, IV, is always in percentage terms on annualized basis, which gives you a one standard deviation range. So supposing if the IV is 25, 200 rupees stock, 1/4, 50 rupees, 250 on the upside, 150 on the downside. 68% of the times over the next 1 year, your range is expected to be between 150 and 250. Right? Implied volatility. Now I told you how to take out the range. If you know the annualized volatility is 16, so what will be the daily volatility? Square root of 256 divided total annualized volatility divided by square root of 256. That is 1. So the next day's movement will be plus minus 1% from yesterday's close. Are we all on the same page? Great, Sukhbir Bhai. Nice to see you confident. Are you getting the confidence, sir? Good. If the implied volatility is 24%, what will be the monthly implied volatility? So, square root of 12 into 24. So, it is 1 by 3.4 into 24 plus minus 7%. Right? Plus minus 7%. Am I making sense? So, what is Vega? What will be my increase or decrease in premium for every 1% change in IV? What will be my increase or decrease in premium for every 1% change in IV? Is called Vega. Right? So when IV is going up, the IV of call and put will both go up. When IV is going up, IV of the call and put will both go up. All expiries, all strikes. Right? Did we see this? Why does this happen? Event. So demand for both the call and puts are going up. When that event gets over, IV falls. Demand for both the call and put will fall. If the market is falling in a big way, there is demand for put. The demand for put will always be more for demand for calls. The IVs will go up. Right? Great. Similarly, when the markets have stopped falling, those people who had bought puts, they are no longer interested to hold. So the demand for the put will fall. What will happen? Demand for the call will also fall. So IVs of the put will fall faster than the IVs of the call. And the total IV will also fall. So did you notice that I showed you in the chart also? Right? When the market falls, IV goes up. IV of the put will rise sharply than the IV of the call. IV of the call also goes up. So total IV goes up. IVs of the puts are always more than IVs of the call. When the market rises, IV goes down. IV will fall, but less sharply than the IVs of the put. IVs of the put will fall more sharply than IVs of the call. Since the IVs of the put is more than the IVs of the call, IVs of the put will fall more sharply once the panic will rise sharply, then the panic is over. So IV is going to fall and the put value is also going to fall. Am I clear? Is this clear? When market goes up, what will happen? Both will fall. When the market falls, both will rise. Put and call. Put will rise more sharply than IV of the call. When the market rises, IVs of the put will fall more sharply than IVs of the call. Is this clear? What is VIX? What is VIX? Yes, Anand bhai, what is VIX? Volatility index. What is volatility index? Of Nifty monthly calls. Nifty monthly expiry. So what is the monthly expiry? July 29th. Yes, Anand bhai, which strikes? Which strike, Abhishek sir? At the money call. 2 in the money. 2 at the money. 5 strikes call and 5 strikes put. Total of 10 strikes. Average of these 10 strikes is the India VIX. So this is the benchmark for finding out the Indian volatility. This is the benchmark for finding out the Indian volatility. The same VIX is there for the American markets also. Am I clear? They use the same methodology which we are using. Now after the 15th, Ramakrishna sir, can you see this? It is annualized in nature for the next 30 days. So monthly contracts. So after 15 days, what are we doing? We are changing to the next. So 15th of July, we will keep the August contract. Average of July and average of August, we will take it into consideration. Is this clear? Now this IV which you are seeing in Opstra, this IV is actually the 10 strikes average IV for each individual instrument also. When you are seeing this IV of 19.48, this IV is for the 10 strikes of Bank Nifty at the money, 2 strikes in the money, 2 strikes out of the money. Is it clear? Good. So in India, stock options are not very liquid. Leaving the Nifty 50 stock options, other stocks are not very liquid in the options. How many of you know this? So if you see here, State Bank, IV 31.44. Ramakrishna sir, in India, leaving the top 50 stocks or top 30 stocks, options in other stocks are not very liquid, especially on the put side. In the call side, you will find liquidity, but on the put side, you might not find. So Reliance is the top 30, so it is liquid. State Bank top 30, Tata Steel top 30, Tata Motors top 30, TCS top 30, Infosys top 30, liquid. Maruti top 30, liquid. So all those 50 stocks, HDFC Bank, ICICI Bank, they're liquid, right? So you will find liquidity in them. But other than that, if you go to the other stocks, liquidity means participation, Rajesh bhai. बाकी सब में participation नहीं है. People are not interested. Yeah, that is liquidity, Sudhanshu sir. If the OIs are limited, that is called liquidity. यश भाई, अगर आप मार्केट बढ़ रहा है तो do you need to hedge? Yash bhai, if the Nifty is going on, do you need to buy a put? Do you need to buy a put? No. Only when the market is falling, you need to protect your investments. You buy a put. That is why the demand for put goes up. So when the market is rising slowly and steadily, you don't need to buy puts. So when the price of underlying goes up, call option will go up, put option will come down. When the strike price is in the money for put, out of the money for call, the call premium will be less, put premium will be more. When volatility goes up, call premium will increase, put will also increase. Volatility falls, call premium will fall, put will fall. Greater the time period to expiry, greater will be the option premium. Lesser the time period, lesser will be the option premium. When interest rates go up, call option will increase because of the rho factor, put will decrease. When interest rate falls, call will fall, put will go up. Right? No, Rajesh sir, you must never do that. You must never sell stock options. Can somebody tell why must we never sell stock options? Can anyone tell? To earn theta, why should we never sell? Okay, number one, monthly expiry. Number two, liquidity. What else? Srivastav sir, there is one very big point. Yes, OP sir. Okay, delivery. Very good. Settlement and delivery. One of the biggest point, Avinash sir, is stock have their own individual triggers or catalyst for price move. And when that catalyst or trigger happens, there is a very big price movement. You will not be able to square off. Yes, Harish bhai, very good. You will not be able to square off. So never ever think, Rajesh bhai, of doing stock options and selling. Stock options, I will teach you what to use and when to use. Right? You should never use stock options for intraday, only for position. 3 to 5 to 3 to 10 days positional call. Good, Rajesh bhai. How long have you been trading? आएंगे हरीश भाई सब आएंगे. How long, Rajesh bhai? Don't think when I have given you a strategy, why you want to tamper. Yeah, I know your experience is good, Rajesh bhai. You've been selling stock options. Yeah, I understood. Rajesh bhai, I know where you are coming from. Yeah, I know where you're coming from. That's why I asked you that question. Right? So when dividend is declared, call option will fall, put option will go up. Are we clear in all these factors? Now, how do I come to know the valuation of the current IV? Through the IV rank and IV percentile. Right? What does the IV rank tell you? Your current IV minus 52-week low divided by 52-week low, 52-week high minus 52-week low. So where is your current IV compared to the 52-week low and high? Is it near to the 52-week low or is it near to the 52-week high? Now the problem with the IV rank is, what happens? What type of data it takes? It takes the outliners, extreme data. So if the IV has gone up from 40 to 80 in 2 days, it takes extreme data. When you're taking extreme data, there is a problem. Right? When you're taking extreme data, there is a problem. You cannot help it. So what do? We come to the next one, IV percentile. Number of days over the past 1 year, the current IV is greater than the past 1 year IVs. Now this number can be anywhere between 6 months to 1 year. The higher percentile means that the options are expensive and option selling strategies can be used. Lower percentile suggests that option buying strategies can be used. Am I making sense? Am I clear? Good. Stay hungry, stay foolish. Right? So how is your Josh now? Great. So I must thank this group for the wonderful response. Already 50 people have registered for the live market, and we will close the live market session very soon. Thank you for all the wonderful response. Great. Can we start the new one? Are we all set? Great. Yes, Rohit bhai, ask your question. Ask your question. So Rohit bhai, very good question. At the money call and put, if they are different for calculation purpose, we keep one level or one strike of call and put together. You remember in the live class, we kept one strike together, common strike, right? One strike. It will always be different. So at the money will be from the spot market price for the weekly options, and the last expiry will be the future market, will be the reference. So all the weekly expiries, spot market, and the last expiry will be monthly futures. The monthly expiry will be the future price for the reference. Is it clear, Rohit bhai? कभी भी एक भाव नहीं आएगा. Deval bhai, I know the reason. Every time is different. The update of the OI is done by the live market is different. Check the time. OI delay is there by a minute or so. Check the time. So that is why the difference of the time is coming. Deval bhai. At the end of the day, after 340, you will get the correct OI. So that is why I told you they are market linked. So a lot of people do their strategies with OI, and I tell them that they are making a mistake. I will not name people. There are a lot of people on YouTube who don't understand the concept clearly. They show that how OI is decreasing and they have made money. Everything is wrong. OI is quite delayed. If you want to take action through OI, you have missed quite a bit. Right? All set. So it's delayed by a minute or so. Abhishek sir, 1 minute में तो बहुत कुछ हो जाता है. I showed you in the option chart. So between 0 and 20, IV percentile, Deval bhai. Only option buying. Options are cheap. Between 20 to 40, Sumit bhai. Options are relatively cheap. Option strategies. Between 40 and 60, IV percentile, Ramakrishna sir. Options are fair value, neutral strategies. Between 60 and 80, options are moderately expensive, selling strategies. Between 80 and 100, options are very expensive, naked options. Am I clear? Right. Now, The practical purpose of Greek strategies. Never give up. Today is hard. Tomorrow will be worse. But day after tomorrow there will be sunshine. Naked put का मतलब है naked call, खाली call खरीद रहे हैं, उसको बोलते naked call. Long call बोलते हैं प्रमोद जी. Naked माने कोई strategy के बिना खाली call खरीद रहे हैं या खाली put खरीद रहे हैं. What are option strategies? When I buy one or more legs of call and put, and both are used together, they are called strategy. You remember we did long straddle, call खरीद रहे थे, put खरीद रहे थे. We did long strangle, we were buying out of money call, put. They are also strategies, right? So what are strategies used for? Directional as well as non-directional. Directional, when the option traders knows the direction of the instrument he is trading, it can be directionally in an uptrend or a downtrend. Through your strategies, I believe a lot of you are TMP students. How many of you are TMP? Suradip sir and Vivek sir have taught you a lot of strategies. Golden Bank Nifty RS, right? So you know the direction that it is going to go up. Okay? You know the direction it is going to come down. Non-directional. When option trader does not know the direction, but is betting either in a big movement, either side, we did this, long straddle or long strangle, or a range bound movement, short straddle, short strangle. There are other strategies also which are there, which we'll discuss today. So can we start? The first one, directionally bullish. Can you see this word? Bull, call, spread. Bull, call, spread. You are bullish in the market. You are using call as a median. And what is the meaning of the word spread? Buying and selling a call with different strikes. Spread is buying and selling different strikes. Okay? So what are you doing? You are buying a higher premium call. It can be in the money or at the money, right? So let us see. Ramakrishna sir, what is your viewpoint in Nifty right now? This is the Nifty chart. What is your view? Bullish? Vikesh sir, what is your view? Bullish? Okay? Neutral. So let us assume who is bearish. Okay, so first let us take Ramakrishna sir. He is bullish. So what does he do? Ramakrishna sir believes that Nifty can go to 16,000 rupees, 16,000 by 15th of this month. So what has Ramakrishna sir done? 15th expiry. He has bought the 15,800 call. So Ramakrishna sir has paid 49 rupees. Very good. What is this break-even point? Strike plus premium. Am I clear? Now, Siddharth sir, let us go down to the Greeks. Can you tell me one drawback? What is the drawback of the strategy? Lovely theta. If nothing happens by Tuesday, the premium will be down. Right? Now, Ramakrishna sir goes to the option chain. If he sees here the highest open interest after 15,800 is in 15,900 and 16,000. So what does he do? He knows that his target is around 16,000. So what does he do? He sells. $16,000 call. He's buying the 15,800. He feels that this expiry it is not going to go above 16,000. Right? So what happens when you are selling? What happens? You receive the premium. So its costing has come down to 39 rupees. 49 minus 10, 39. Can you see this theta? From minus 10, it has come down to minus 5. Has the theta been neutralized? Has this costing come down? Plus 1, minus 1. He's bought one call, 15,800, higher premium. He has sold one call, lower premium, seeing the option chain. Out of money call, highest open interest, resistance. So what will be the graph when you buy the 15,800 call? Vikesh sir, will it be like this? 15,800. When you are selling the 16,000 call, what will be the graph? Like this, 16,000 call. So this is the 16,000 strike. So when I combine this both, what will happen? From 15,800, it will go up to 16,000, and then my maximum profit will be flat. Why? Because my unlimited profit of 15,800 call will be neutralized by the unlimited loss of the 16,000 call. So when I combine this both, this is the one which I'm going to get. So below 15,800, my loss is limited to 39 rupees. And above 16,000, my profits. What will be my profits? No limited profit. Can you see my profit gets frozen? So what will I get? 200 rupees minus 39. So 161. So my maximum profit will be 161 above 16,000. So my maximum risk 39 rupees. Maximum profit 161. So if I am bullish, can I see this trade? Number one, reduces my costing, reduces my theta risk, and it gives me excellent risk reward ratio if I'm right. Can you see 12,100 maximum profit at 16,000 and above? Maximum loss 2,899 below 15,800. Am I making sense? So this is your first strategy. It is called a bull call spread. When you are bullish in the market, Abhishek sir, any directional strategy will have a stop loss. The stop loss will be the value of Nifty. Whenever you are doing, I showed you the payoff chart, Rohit sir. This is the payoff chart, same. So same thing which I showed you. Below 15,800, my loss is fixed, 39 rupees. My break-even point is 15,839. And my maximum profit will be at 16,000. Can you see this? From 16,000, my profits will be frozen, 161 points. Bull call spread. So when you know a strategy where you are bullish in the market, you can make money. Okay. So first of all, you guys are already champions. Can you teach me what is the principle of bullish zone? What is the principle of a bullish zone? Anyone knows that? Okay. There is a simple mathematical formula. Probably, I think so. I need to take a technical class also. Okay. Note the 52-week high. Okay. What is the 52-week high here? 15,915. Okay. Okay. Now, there is something called ATR. Are we all aware what is the ATR? Size of the candle. Is this clear? ATR is the size of the candle. Yes, Ramakrishna sir. So we take the 14-day average. On the day Nifty has made a 52-week high, we take the value of the ATR. What is the value of the ATR? 163. Okay. So what do? I multiply this into 4 times. And I subtract this from the 52-week high. As long as, my friends, Nifty is above 15,267, I will draw a line here. Until unless it does not close 2 days below this level, Nifty is in a bullish zone. That means it is extremely bullish. It is the normal correction in the 52-week high. So one should never think of selling here. Never. This is called a bullish zone. What is a bullish zone? 52-week high minus 4 ATR is a bullish zone. This is the support line. So I must always look to buy or do bull call spread in Nifty. So when can I do a bull call spread? If it comes to the low and does not break. If it comes here, next 1 or 2 days does not break, again it will go up. Yeah, this is for every stock. So Deep sir, if you see Bank Nifty, if you see Infosys has never gone below this level. So sometimes what might happen, it might close for 1 or 2 days. Again it will come back up. If it is bullish, it might go down for 1 or 2 days, 3 days. But again, if it is bullish, it will come back up. So this formula helps me to find stocks where I need to do bull call spread, or index where I need to do bull call spread. Am I clear? So now where can I do a bull call spread? If it comes to the lower levels, reverses. If it touches 50 SMA, goes up, then I know. Like take this example. Here it was 15,500. So the level was 15,500. ATR was the same. So around 700, 14,800. So when it came here, I could have done a bull call spread. So this is one of the ways you can do a bull call spread. So these are just small techniques, right? Small techniques. You can just keep drawing the line so that you know it is getting in or now out. So take this example, 15,431. What is the ATR? 226. So 900 points, right? So it will be 14,400 here. Can you see this? This was that area where the market went up above 50, SMA broke out. So you can now design your system based on this parameter. Am I clear? But avoid stocks which are trading below the bullish band. This is called a bullish zone or a band. So this rule can help you in saving a lot of money. Now you can then create your own system कि 50 SMA के पास आएगा तब buy करके हम लोग spread बनाएंगे, small stop loss. So then there's a very simple rule. Supposing it goes up, the swing highs are breached, buy with a stop loss of this low. You can do a monthly bull call spread also, right? So then the lot of other parameters come in and you can play. But important thing is you must know that this is the bullish zone. So in this bullish zone, if any indicator comes to a sell, it is not important. Even if you get a sell, candlestick sell, like the shooting star, not important. Small correction, it will reverse. So in a bullish zone, the stocks are very bullish. So do not get too excited in selling. Am I clear? So till 15,200 does not breach, don't think of selling. So this is a good thumb rule to help you. Good. Rohit bhai, this is the formula. अब 52 week high लिखेंगे, उस दिन क्या था 14 ATR का वैल्यू लिखेंगे, उसको 4 से मल्टीप्लाई करेंगे. It will give you the lower range. I'm not a technical teacher. If I was, I would have definitely helped you. So now you have to build on your own. You have to navigate and try to find out. Right? So same as for 52-week low. What will be the 52-week low? So you write the 52-week low. If it is 800 rupees and the ATR is 180. So sorry, 1500 rupees, 15,000. So what is this? So you have to add. When you're subtracting from 52-week high, you have to add from 52-week low. So this is your resistance line. This is your lower base. Is this making sense? Great. So basically, this is one small tip. So those stocks which are in the bullish zone, they will give you bigger returns than those stocks outside the bullish zone. History has shown that. You can take any bull stock, it has remained in the bullish zone for long. So basically, same strike, same expiry, same underlying, same number of options. What did I do? I bought 15,800 call. I sold 16,000 call. Right. Yeah, Abhishek sir, you can trade your breakouts. Breakouts are separate. Right. And probably you are a good trader, so you know how to trade breakouts. Right. So leg 1, I'm buying 15,800 call. Leg 2, I'm selling 16,000 call. So how do I select this leg 2 call? I know that in the long run, I'm bullish about the underlying. Leg 2 strike will be the highest open interest. Market players are expecting profit booking. So we know that In the chart also 15,900 is a resistance. And we know that 16,000 is a psychological level. So around 15,900 to 16,000, you can have strong resistance. Am I clear with this? Now, OP sir is saying, sir, I think so. Markets will go up. But Ramakrishna sir is wrong. Markets will go up only on the 29th of July expiry. Markets will not go up on 15. So OP sir, what does he do? He's interested for the July expiry. So OP sir, what does he do? He buys the July 29th 15,800 call and he sells the July 29th. See, both have to be of the same expiry, same underline. Right? So now what is the PL? 136 he buys, 61. Right? What is remaining? 75. What is his profit? 125. What is the payoff? If it goes above 16,000, it will be 125. This graph is wrong. Don't look at the graph. It will be like this only. Am I clear? I will show you right now. OP sir, are you clear why the maximum profit is 16,000? OP sir, are you clear? Let's do this practical example. OP sir, okay, OP sir is not clear. So let us do a practical example. Let us do it in Excel. OP sir buys 15,800 call, 29 July. And OP sir sells 16,000 call, strike price, 29 July. Let's do this practically. $136.61. Okay. So what is the net premium OP sir is paying? 136 minus 62. So let us write this as 62. Is this clear? OP sir buys this at 136, sells this at 62. Now Nifty at expiry. What will be the underlying close at expiry? Nifty close at expiry. That is the 29th of July. Right? And what will happen to 15,800 if Nifty closes at 15,500? Lovely. Will it be zero, OP sir? If you have purchased 15,800 strike price, Nifty closes at 15,500. What will it close at? OP sir? Zero. Thank you. Shivastav sir, what will 16,000 call close at? Shivastav sir? Shivastav sir, I am waiting for your answer. Waiting for your answer. We will not move forward till you don't answer. Yes, Shivastav sir. Vipin Bhai, will it close at 62? 0. Thank you, OP sir. Shivastav sir, where are you? So my total payoff is 0. How much will I lose? Shivastav sir, मैं कितना lose करूंगा? खाली the premium 74. My total loss is only 74. This is my payoff. At the time of expiry. Now 15,600. Vipin Bhai, what will be 15,600 expiry? What will be my 15,800 call? Lovely 0. 16,000 call. Pramod Bhai, 16,000 call. Yes, Pramod Bhai. Waiting for your answer, Pramod Bhai. Thank you, 0. So my maximum loss is the premium paid. Sudeep Bhai, 15,700. Out of money call. I have bought the 15. 0. 16,000. 0. Payoff. 0. Only the premium loss. 15,800. 0. Add the money. 0. No intrinsic value premium. 16,000. 15,900. Lovely. All the 3, all the 4. Lovely. 100 rupees. Can you see now? Intrinsic value premium. Strike is 15,800. Spot 15,900. Spot minus strike greater than 0. What is 16,000? 0. What is the payoff? Plus 100. Right? What is the premium paid? 74. Now 16,000. What is it? 200. 0. 200. Minus 74 premium paid. What is the profit? 126. Now can you see 16,100? What is it? 300. What is this? 16,000. Avinash sir, is it plus 100 or minus 100? OP sir, you have sold 16,000 call. The value is 100 rupees. Do you have to pay? Yes, you have to pay. OP sir, it is minus 100. Can you see? Spot greater than strike in the money. Since you have sold, you have to pay. Am I clear? What is the maximum profit? 200. What is the premium paid? 74. 126. Can you see, even when it is going up, my profits are frozen? When it goes to 16,200, 400, minus 200. So can you see this now when I plot this? Till 15,800, my loss is minus 74. What is my break-even point? 15,800 plus the premium, 15,874. And the premium gets at 16,000, what happens? 126, it closes. So what is the graph like? Like this. Lovely Shiv sir, lovely observation. Lovely observation. So my reward will be 9,500. The risk will be 6,500. 74 points. Am I making sense? Now is it clear? Limited loss, limited profit. Up to 15,800. My loss is at 74 rupees. And after 16,000, my profit is at 126. Now all of you are clear with this strategy. OP sir, are you clear, sir, in the strategy? Now there is no somewhat. Now no somewhat. Pura clear. Shivastav sir, is it fully clear? Or confusion is there? Clear. Very good. I like this. Rohit bhai, this is where your technical analysis skill comes in. If you are bullish, you know what is your target where you will exit. So you know that 16,000 is your exit target. So you know that you will buy at 15,800, sell at those areas where you expect profit booking. So this is where, as I told you in the earlier class also, options cannot give you these points. Options can tell you the strategies you can make depending on your view. So these spread points you need to identify. So now if someone else is more bullish, supposing you are more bullish in the market, exit. OP sir, use a stop loss and exit. So you are selling 16,100 call. So Rohit sir is more bullish. So instead of 16,000, he is now selling 16,100. Right? Yeah, exactly. That's what we did. Can you see at 16,000? This is 0. We are getting this profit, Sudeep sir. So you can create your own points based on your own decision making. Is the strategy clear? Good. So what is happening? Unlimited profit of the first strike, 15,800 call. And unlimited loss of the 16,000 call is neutralized. No sir, this is a positional strategy. You can use it for intraday also, but this is actually a positional strategy where you have a 3-4 day view. As per my understanding, Surodeep sir has given you quite a number of setups, bullish setups and bearish setups. So you can work on them. Is this clear? Bull call spread. Welcome to the first strategy of the day. No, these will not be. Stop mock, Siddharth sir. No, we are doing both these trades together, Vikesh bhai. We are both doing both these trades at the same time. Why are we doing this at the same time? Can anyone tell me? A, to reduce the premium. B, to neutralize the theta impact. Right? We will enter together, Vikesh bhai, and exit together. So this is together. So when you are doing a long straddle, you remember we do both together. You are doing short straddle, you're doing both together. You're exiting both together. Same way. So these are different trades, but we are taking this as one trade. That is why we are calculating this as one profit. Right. Thank you, Vikesh bhai. You are a smart person. So first of all, Vikesh bhai, Ramakrishna sir, Abhishek sir, Ashutosh sir, if your view is for 5 days, you can do the 20-second expiry also. So it depends. If your view is for 10 days, then you can do the July expiry. If the view is for 1 month, you can do the August expiry. Right? How many of you are doing trend following? Anyone doing trend following? That is your call, Shiv sir. Trailing, stop loss, everything is your call, your strategy. What is your strategy? Decide on that. So the simple principle is, if you are doing 3 lots and your holding period is 15 days, for 5 days you book 1 lot. If you are doing 3 lots of bull call spread, after 5 days book 1 lot. Another 5 days book 1 lot. And the last lot you can do the trend following or the trailing stop loss. सब चीज ट्रेंड फॉलोइंग में नहीं चलता, सब चीज ट्रेलिंग नहीं कर सकते. अगर 3 लॉट कर रहे हैं, what is the advantage of this strategy, Abhishek sir? Can you see the margin? Can you see this margin, my friends? Only 15,000 rupees. So those people with lesser capital, even in intraday, if you're bullish, you can do a bull call spread with a stop loss. The theta risk is neutralized. Am I clear? Good. अभिषेक सर, ये मेरा नहीं है, स्टॉप लॉस डिफाइन नहीं हो सकता, उसके लिए आपको टेक्निकल क्लास करना होगा. स्टॉप लॉस डिफाइन स्ट्रेटेजी से नहीं होता. स्टॉप लॉस डिफाइन होगा सपोजिंग फ्रॉम योर चार्ट यू हैव डन अ बुल कॉल स्प्रेड yesterday. So you have decided that if it breaks 15,600, I will exit. So the day it breaches 15,600, what you will do? You will close the strategy. So based on the underlying stop loss and the underlying target, you will discuss. It's all very clear. It's already discussed. Can you see this? The Greeks have been discussed. According to the underlying, yes. So what is the Greeks? Theta neutralized. Can you see that theta is neutralized? Delta is also neutralized. Gamma positive, vega positive. So what are the Greeks? Delta positive, theta negative, gamma positive, vega positive. Is this clear? Rohit sir, the delta here is plus, this got subtracted, so the net delta is positive. Shiv sir, if it is a directional strategy, it has to be positive. You are playing for direction. You are bullish, so the delta has to be positive. The gamma, okay, so Vikesh sir, I think you are a very active trader now. Now what makes me understand? Okay, friends, please click this photograph. Can anybody click this photograph, send in the WhatsApp group? Send. Have you sent this? Please send in my WhatsApp group. Okay, just a minute. Just a minute. Let's convert this to 16,000. Just a minute. Yeah, please send this photograph into the WhatsApp group. Right? Please send this photograph into the WhatsApp group. Is it sent? Good. Good. all set. So is this strategy clear? Are the Greeks clear? Delta positive, theta negative, gamma positive, vega positive. Direction, I am bullish. So the next one, bull put spread. You are bullish in the market. You are using put and there is a spread. So how can you be bullish in the market? And use a put, Abhishek sir? How is this possible? You are bullish in the market. Lovely Champak bhai, how are you, sir? Anand bhai, what did you have for breakfast? Because you are answering excellent question today. Anand bhai, today you are in form. You are Virendra Sehwag today. Today you are in big form. You have really revised well. And what did you have for breakfast? Keep up this momentum, Anand bhai. Bull put spread is a two-leg strategy. When you use with puts, when you are bullish, how can I use puts? You have answered. You will sell a put, higher premium. Harish bhai, higher premium. You will sell a put. You will buy a put, lower premium. Right? You will sell a put, higher premium. Buy a put, lower premium. Now take this earlier example. What did we do? We fell at 15,800. We were bullish. So we had bought the 15,800 call. And we had sold the 15,000, 16,000 call. Right? Now what are we going to do? We are selling higher premium put, 16,000. And we are buying a lower premium put, 15,800. Can you see this? We are buying a lower premium put. So how much am I receiving? This is a net credit strategy. Yes. Are we receiving money? How much are we receiving? 124 rupees. Yes. So now, Ramakrishna sir, what can be my loss? 200 rupees maximum loss. But I'm already receiving 124. So what will be my loss? 76. Yes. So let us do the Excel of this strategy. So this is a bull call spread. Hi you guys, I hope I am not boring you guys. Sunday morning, if you are getting bored, I have failed in my exam. But this is now the most easiest part of options. You have done the hard work. Now you just need to focus. With some tips, you can make it. Right, we'll have to have chocolates. Great. So Nifty put, what am I doing? 16,000 put I'm selling. So I'm receiving the premium, minus 340. Right? So let us write it at 340 and minus 216. So what is the premium? 124. This is premium received, right? Now let us have a look. So my friends, what will happen now? Interesting. 15,500. What will happen to your 15,800 put? Is it out of money put or in the money? In the money, you have bought the put 15,800. Will you make profit or loss? In the put, what did we say? Profit. It will be a profit. अविनाश सर, मैंने पुट खरीदा है 300 रुपया पे ऑफ. Now 16,000 put. What will happen? Loss 500. So to pay minus 200. What am I received? How much premium have I received? 124. So what is the loss? 76. Are we clear? OP sir, जब मैं पुट खरीदता हूं, strike minus spot. Strike is the right to sell. When I'm buyer of a put, I'm selling at 15,800. I'm buying at 15,500, 300 rupees. So buyer of 16,000 call, right to sell. I am the seller, so I have to pay for the loss. Am I clear till here? Pramod sir, clear हुआ? Buyer of a put को right है. Always you have to buy first and then sell. Whenever you are doing a strategy, you will buy first, then sell. Whenever you are squaring off, you will cut off your sell position first and then cut off your buy position. Is this clear? Yeah, saving the margin. Saving the margin. Good. 15,600. Pramod sir. Pramod sir, 15,800 का पुट आपने खरीदा है. निफ्टी बंद हुआ 15,600. What is the last AP of? Lovely Pramod sir. I'm impressed today. मेरा दिन आपने बना दिया. Vikesh sir, 16,000 put you have sold. Lovely Ramakrishna sir, you have become a champion. So premium is 124 and this is 76. So can you see my loss is only minus 76 rupees. Now let us come to 15,700. What is it? Plus 100. 16,000, lovely. Everyone, Krishna sir, minus 300. Is this clear? Can you see my loss is stagnant at minus 200? But I've already received 124 rupees as premium. Pramod bhai, जब मैंने बेचा था मेरे को पहले ही मिल गया. मेरा loss खाली 76 rupees है. So can you see I'm not losing more than 76 rupees. 15,800. 0. What is it? Minus 200. Minus 200. Yeah, welcome back. Can you hear me now? Great. So I lost my net connection or the GoToMeeting connection. So I'm back now. So let us do this example. 15, 900, 0, right? Minus 100, minus 100. Can you see now? I'm making 24 rupees. 16,000, 0, 0, 0, 124. So can you see this now? 0, 0, 0. Here is it. रोहित भाई यहीं पे लिखा हुआ है. Is the screen hanged? Okay. 16,200, 0, 0, 0, 124, 124. So can you see this PL? What is it? You are selling the 15,800 strike price put, right? Like this. You are buying the 16,000 strike price put, like this. Now when I combine this both, what do I get? So from 15,800 maximum loss minus 76, 16,000 maximum profit 124. Am I clear? My friends, can you see this bull call spread and bull put spread? Are they the same? If we take the same strikes, are they giving the same profits? Let us check the Greeks. OP sir had sent the Greeks. Yes, one is a debit, one is a credit. Let us check the Greeks. Please check, my friends, are the Greeks nearly the same? So my friends, if I'm doing a bull call spread or a bull put spread, if the strikes are the same, or the bull call spread or the bull put spread, my PL technically should be the same. Same thing, Greeks are delta positive, theta negative, gamma positive, vega positive. Both are the same. Greeks, you remember the Greeks? Was it the same? Shiv sir, was the Greek the same? Delta positive means bullish strategy. Theta negative, that means you will lose premium if there is no major movement, theta loss. Gamma positive means if the movement comes in your favor, your delta will go up. सब सेम होगा विकेश भाई, same, nearly the same. Am I making sense? So my friends, can you see the margin? What was the margin in the bull call spread? 15,000. What is the margin in the bull put spread? 25,000. So will I do this strategy? I will prefer a bull call spread. I will not do a bull put spread. So what is the difference between the strategy? What is the difference between bull call spread and a bull put spread? Can you see? In a bull call spread, what were we doing? We were paying that 74 rupees difference. We were paying the 74 rupees difference, debit. And in a bear put spread, we were receiving that 124. Right? It is a credit. Paisa mil raha tha. Can you see the difference? We paid the premium and we received it. Can you see this? Rohit bhai, what happened? You paid 136. You received 62. Yes? Rohit bhai, are you there? आपने कॉल खरीदा था 136 रुपया का, 16,000 का कॉल बेचा 62 रुपया में. 74 rupees was paid by you. In here, you sold a put 216 rupees. Sorry, you sold a put, you received 340. You bought a put, you paid 216. What is the net amount? You received 124 rupees. Here you are paying. It's a debit. आपको पेमेंट करना है. यहाँ you receive. It is a credit. So bull put spread is a credit strategy. You are receiving the premium upfront. भले बाकी PL सेम है, लेकिन यहाँ पे आपको पैसा मिल रहा है. यहाँ पे आप पैसा पेमेंट कर रहे हो. Am I making sense? Am I clear? Good. Yeah, Chintan bhai had a good point. What is your point, Chintan bhai? I don't understand why we need margin in bull call spread. Okay, Chintan bhai, that margin is minuscule. 15,000 rupees is nothing. Right? So don't worry. That is just a token margin which is kept by the exchange. They also agree that you will not lose more than the premium paid. Good. Now, Vikesh bhai said a question that if I don't want to do bull put spread, why are you teaching me bull put spread? Very good point. Now, my friends, do you remember, Yash bhai, we talked something like IVP greater than 70, 80 options are expensive. How many of you remember that? Did we talk something like that? When IVP is greater than 70, 80. Right? So remember, when IVP is greater than 65, what is it? Options are expensive. Correct? Now, my friends, Ramakrishna sir feels that Nifty is not going to break 15,500. Right? Ramakrishna sir is believing Nifty is not going to break 15,500. So what is Ramakrishna sir doing? He's selling out of the money put. Let's do this. Here the ID percentile is 4. If this was 70, Ramakrishna sir will sell out of money put at 95. Right? He's selling out of the money put at 95. And he feels that with a strict stop loss of 15,500. Ramakrishna sir is saying if Nifty breaks 15,500, I will square off the position. But what is the challenge here? Unlimited loss. So if there is an overnight gap down, Ramakrishna sir is trapped. So what will Ramakrishna sir do? He will now buy a far out of money put. in order to cover his loss. Hedging. So he's buying a 15,400 put at 40. How much is Ramakrishna sir receiving? Net credit 55 rupees. Am I clear? What is his maximum loss, Anand Bhai? Let us see that. Right? Now let us do this example. What happens if Nifty closes at 15,700? Both will be zero, right? 55 rupees profit, net profit 55. 15,600, 0, 0, 0, 55, 55. So this is the payoff. Now comes to 15,500, 0, 0, the payoff is 0. Whatever the premium received is his profit. Now 15,400. Can you see this? He is a seller of 15,500 put. So we'll have to pay 100 rupees. 0. Minus 100. 55 minus 45. Can you see this? He's now come into a loss. 15,300 minus 2. Lovely Pramod sir. I have really seen improvement in you. And you have proved it to me. Practice makes a man perfect. Minus 300. 0. Minus 300, 55. Am I making sense? Now my friends, can you see Rohit bhai, इसमें अगर मैं सौदा रखता हूँ, if I keep this position, can I have huge losses? Abhishek sir, can I have huge losses? 245 rupees loss. So Abhishek sir, in this strategy, I will have to cut my trade. OP sir, जैसे ये 15,500 के नीचे गया, मेरे को ये ट्रेड को काट देना है. When the IVP will be high, this premium will not be 95. What will this premium be? Around 150. What will this premium be? Around 65. So my payoff will not be 55 rupees. It will be 85 rupees. So when the IVP is high, this option premium will go up and my risk reward ratio will change. So with a strict stop loss, because when the IVPs are expensive, I will do a bull put spread out of money strike and I will buy far out of money with a strict stop loss. Of 15,500. Below 15,500, my risk reward ratio will start deteriorating. I will square off. Am I making sense here? So what will happen? 85, 85, 85, 85. So this will be minus 15, 85. So now my risk reward ratio is getting better. This is what happens when the IVP go expensive. Am I clear with this? We will square up both positions. रोहित भाई, क्योंकि हम लोग का व्यू गलत हो गया. सर को लग रहा था 15,500 टूटेगा नहीं, अगर वो टूट गया तो सब पोजीशन स्क्वायर ऑफ कर लेंगे, and if we don't square off and it remains up, we will get the theta. So what are the Greeks here in this strategy? Profit booking ऊपर जाएगा कर लीजिए, या you will get the theta benefit. Look at the Greek before deciding on your profit booking. If it goes up, delta positive, you make money. Here, what is the advantage? See, what is the advantage? Delta is positive. Theta is also positive. So if market does not do anything, remains here, you make money. Gamma negative, vega negative. So if the market falls, my loss will be higher. If the market falls, my loss will be higher. Am I making sense? Am I clear? So if the market does not do anything, I will get the theta benefit. But if the market falls, I will start losing money. My maximum loss is very high. So you must always know strategy is good or bad. You must know when to exit. Is this clear? Gamma negative, vega negative. That means if the volatility goes up, I will lose money in this strategy. Why? Because I've sold a call with a higher premium. It will go up. And if the market falls, what will happen? My delta will go against me. Right? Sorry, it's a put. The delta will go against me. Is this clear now for everyone? Probability of profit means out of 100 trades, 70 times you will make money, 30 times you will lose money. Right? So now, Vikesh bhai, are you clear? Bull put spread. Good. All making sense. Lovely. Very good. Very correct. You must know the support level, Sudhanshu sir. This is going to be your support level. 15,500. Below this level, you will exit. You are not going to hold this trade. Right? Strict stop loss. Good. So my friends, let us take a break. Oh my God, it's about 2 hours. Please come back. 11:24. Next 10 minutes. We are going to do one more bullish strategy, and then we will do directional range bound strategies. See you soon. Yes, friends, welcome back. How was your break? How's it going? Great. Ramakrishna sir, this is live. That is what I told you in the live class. Stage 2. Stage 2 is all about knowledge. Right? Now we come to the third strategy. So did you see this bull put spread? Good. Now we come down to the third strategy. Bull call ratio back spread. Anand sir, this is life. I told in the beginning, every saint has a past and every sinner has a future. The fact you have made a loss earlier on does not stop you from making profits from now. Right? You have learned from your mistakes. Now it's time not to make those mistakes. So the strategy is deployed. Bull call ratio back spread. See the name. Bull call. You're bullish. You're using call. You're using ratio back spread. So what do you mean by ratio back spread? So first of all, when will you use this strategy? When you are extremely bullish in the market and you are expecting movement in the bullish direction. -1 +2. You are selling a call which has higher premium. You are buying 2 calls which have lower premiums. You are selling a call, single call which has a higher premium. You are buying 2 calls of lower premium. Right? Now, how do I treat this? So let us take an example. Let us take Bank Nifty. Exactly, Ashutosh sir. This is the beauty of the strategy. See what is the difference. Every strategy has its own advantage and disadvantages. Just see this. You're going to love this strategy. You are selling a 35,500 call. My friend Gangadhar Rao has become a Rajnikant. He's buying 2 strikes of 36,000 call. So you're buying 2 lots of 36,000. Selling 1 lot of 35,500, you are receiving 470. When you are selling 2 strikes, 2 lots of 36,000 strike, what are you paying? 550. What is the net payment? 80 rupees. So what happens? Since you're buying 2 lots, you will have unlimited profit. First part of the strategy. Can you see? The maximum profit is unlimited. Maximum loss is defined. Can you see the Greeks? Delta positive. What is the problem with this strategy? Can you see this theta? Theta is negative. Right? Gamma positive, theta positive. Right? Am I making sense? Delta positive, so it's a directional strategy, but the theta is negative. Right? Now that is why this strategy you will do only in those expiries where there are at least 22 days left. Because the lower the time frame, higher will be the theta loss. So there should be minimum 20 days remaining. You will do this expiry. Otherwise, the theta loss will eat you up. Right? That is why you have to be extremely bullish. Now, let's take an example of this same strategy in an Excel. No, this cannot be done on the weekly. Why? The theta loss will eat you up. Am I clear? Good, Ramakrishna sir. Okay. So I'm selling one lot, buying two lots. So when I'm selling one lot, I'm paying 470, buying, I'm paying 275. So let us keep it at round numbers. So 470 minus 550. So what am I paying? 80 rupees I'm paying. Is this clear till here? Good, OP sir. Bank Nifty at expiry. We will take it later on. Your question, sir. Sunday evening curse is coming. People are dropping out of the class. Shahzad Bhai has just left. Family pressures. Right? Now, my friends. So this is the payoff. Right? So let us see what will happen to my 35,500 call. It will be zero. If Bank Nifty is 0, 0. Only loss is the premium loss. 35,000 also 0, 0, 0. Only loss is the premium loss. 35,500. What is it? 0, 0, 0. Premium loss. 36,000. What will happen, OP sir? In the money call. 36,000. Bank Nifty 35,500 you have sold. Minus 500. Lovely Anand sir. 36 will be 0. 36,500. What will happen? Minus 1,000. What will happen to the 36,000? Ramakrishna sir, how many lots have I bought? 2 lots. So 500 into 2,000. Now can you see this? What is it? 1,500 plus 1,000 into 2 is how much? 2,500 minus 80. So what is my PL? 430. Here it is minus 80. Here is it minus 580. Sorry, 420. Thank you, sir. My maths is weak. Now let us take 37,500. What will it be? What will this be? What will this be, Sukhbir sir? 36,000 call. 3,000. Can you see this? So when I'm drawing here, till my first strike 35,500. My loss is limited to the premium paid, 80 rupees. From 35,500 to 36,000, my loss is the maximum. Then my loss keeps coming down. My break-even point is the difference between the two strikes. Added to this 36,500 plus 80. Can you see here? 36,500, I'm losing only 80. Plus 80. So 36,580. After that, unlimited profit. Am I making sense? The difference between the two strike, I add to this strike, 36,500 plus the premium. So this is my break even, 36,580. Now someone was asking me, sir, if you are bullish, only do a bull call spread. Why are we doing this? Who asked me this question? Anyone asked me this question? Abhishek sir, I think so you asked me. Now what is a PL? In a bull call spread, limited profit, limited loss if the market goes down. This is a bull call spread. Here, my friends, even if the market falls quickly, my loss is too small. And if the market rises quickly, I will have a good profit. Only when the market stays in a range, I will have a loss. If the market rises, unlimited profits. If the market falls, my loss will be too small. And if the market remains in the range, only then will I have a loss. So I have made a rule. Can you see, before I started trading this strategy, what did I say? Extremely bullish, quick time. So this strategy, when you do, you will maximum hold for 4 to 5 days, maximum. If in 4 to 5 days, nothing is happening in your favor, you will square off the trade. If nothing is happening in your favor, you will square off your trade. Why? Theta loss. 22 days for expiry. Unlimited profit if the market goes up. Very small loss if the market comes down. Predefined loss if the market stays in the range. Predefined loss if the market stays in the range. So the maximum loss, my friend, is in this V between the two strikes. If you sold the 6,000 and bought the 61, so in between these two strikes is your maximum loss, and after that is your unlimited profit. Am I clear with this strategy? So when should you do this strategy? Yes, Anand sir, when should you do this strategy? Okay. So when are you extremely bullish? You are using the bookish language. Yeah, good. When volatility is expected to go up because it is Vega positive. Where else can you do? See this Nifty chart. Can you see this big gap downs? At the end of the close, If I do a ratio back spread, can I get money in the next 4 days? Huge gap down. Can you see here? Next 4 days, you made money. So you must look for big gap downs. Just look here. Big gap down, closing. Next 4 days, you made money. Market opened, goes down. Here, look here. See why in here, if you make, just see here, if you make here, even if the market goes down, I'm making money. Why? I will not be losing money. In the bull call spread, what happens? You will lose money if the market goes down. In a ratio back spread, you will not lose money if the market goes down. Am I making sense? Gap downs and big falls. Gap down. I think so. The essence here is not only a weak opening, gap down. Big gap down. Right? Big gap downs. Let me show you. Let us go down to the March month. Everybody knows March 2020 Corona. Can you see this gap down? So if the market is falling, in a bull call spread, I will lose money. But in this strategy, my loss will be minuscule. And if the market goes up, my profits will be huge. Am I making sense? Am I clear? Minimum 20 days to expiry. Try to make after a big gap down and a lower close, or if the market is reversing. Look here. Look here, big gap down, it reverses. Am I making sense? So now I'm teaching you various different strategies. So congratulations, you have completed bullish strategies. So what are the bullish strategies? Let us revise. Bull call spread, +1, -1. Higher premium, +1. Lower premium, -1. Am I clear? Bull call spread. Any questions till here? Next one. What is the name, Ramakrishna sir? Bull put spread. -1 higher premium, +1 lower premium. Right? So what are we going to do? We are going to sell OTM put higher premium. When IVP is greater than 65, OTM put -1 higher premium. We are going to buy FAR OTM put. Lower premium. So what will be the delta? Positive in this strategy. Theta positive, gamma negative, vega negative. Am I clear? Good. Lovely. The third one, minimum 20 days to expiry. Bull call ratio back spread. Holding period, maximum 4 to 5 days. Maximum 4 to 5 days we will hold this trade. What are we doing? -1 +2. Higher premium. We are selling a call, buying 2 calls, lower premium. So it is something like this. Are we making sense? Now we go down to neutral strategies. We will do bearish next day. We are mirror opposite. When one does not know the direction of the market, but you are expecting fast movement. Avinash sir, as per your strategy, as long as you're bullish, as long as you're bullish. So when one does not know the direction of the market, but you are expecting fast movement either side, we know that event, budget, election, long straddle and strangles. Have we done those strategies already? Yes. Or one is expecting range bound movement. One is expecting range bound movement. They can employ short straddle, short strangle. We have already done that. Now what we have not done is butterfly, condor, iron condor and calendar spreads. Okay? Butterfly, condor, iron condor and calendar spreads. So let us start. What is butterfly? Non-directional, neutral option strategy, combining bull spreads and co. So what are you doing? Bull spreads. The spreads are 4 contracts. So there are 4 contracts, 3 different expiries. So what is it? You are buying 1 call. You are selling 2 in the middle strike. And you're buying 1 the 3rd strike. Now, my friends, this is a range bound strategy. Non-directional means range bound. You are expecting neutral. You are expecting the market to stay between the range where you are setting this middle strike call. So when can you expect the range in the expiry? Supposing my friend Avinash sir says he's expecting Nifty to close at 5,900. Can he predict for the July 29th now? Can he predict for the July 29th expiry now? Impossible. Very difficult. It's too far away. But if Avinash sir says for the 15th of July, can he predict? Quite possible. Only 4 trading days to go. So first of all, butterfly will work well in weekly expiries as we are selling 2 legs in the middle. First of all, it will work well in weekly expiries. Point number 2. Point number 2. You must know the range which the markets are going to close on expiry. First, you will get the theta benefit and you must know the range which is going to close for the expiry. So Avinash sir thinks that Nifty is going to close at 15,900. Right? So let us make a butterfly strategy. So Avinash sir, for the weekly expiry, he buys 15,700 call. Excuse me. At 90 rupees. He is selling 15,900, 2 lots in the middle. And he's buying 16,100, 1 lot. Now what has Avinash sir done? He has bought 90 rupees, 5 rupees. So he has paid 96 rupees in buying these two calls. He has received 47 rupees, right? So 49 rupees is his investment. How much has he paid? 49 rupees, right? So what has he done? He has bought the 15,700 call. Can you see this? Plus one. He has sold two of 15,900. Has he done a bull call spread like this? Bought a 15,700, sold a 15,900. Yes. Now what has he done? He has sold one more 15,900 and he has purchased 16,100. So like this, he has sold 15,900, 16,100. So what is his net position? Like a butterfly with a wing. So can you see his maximum loss is only the premium paid, 49 rupees. What is his maximum profit? If it closes at 15,900, how much will he receive? 200 rupees is the payoff. How much is the premium? 49. So maximum profit is 151. At this level. What is the maximum loss? 3,700. Maximum profit 11,200. So what will be the break-even point? The first strike plus the premium paid. So 15,700 plus 49, 15,749. The last strike minus the premium paid. So 16,050. Is it a good range to make money? Yes, good probability Avinash sir can make money. The risk is also less. And we know right now the market is in a range. So my friends, please understand, butterfly, can you see the Greeks? So you will understand. It will not give you immediate money because you are selling. It is theta positive. So money will come closer to the expiry on Tuesday evening, Wednesday and Thursdays. Money will come closer to the expiry. Delta positive. Theta positive. Sorry, delta is neutral, not positive. It is just neutral. My mistake. Why? Because if the market has to stay between this range. Theta positive, gamma negative, vega negative. Are you clear with the Greeks? Neutral strategy. Market has to remain between 15,750. Absolutely correct. You have to predict the middle strike. Absolutely. Am I making sense? Am I clear? Lovely, Avinash sir. You are already an option champion. So when will you do this butterfly? Closer to the expiry. So you will only do this weekly expiry. Point number 2, you must know the range of the market where it is going to close. Avinash sir feels 15,900 will be the range where it is going to close. Am I making sense? 15,900. So what did I do? Bought 15,700, sold 15,900. About 16,100. So Champak bhai, you can do it on Friday, you can do it on Monday, you can also do it on Tuesday morning. Advisable Monday or Tuesday, and you can hold it till you feel it is in the range. So let us take an Excel example. Let us take Excel example, butterfly. Rohit bhai, am I clear? Rohit bhai. Good. Hope you are enjoying. ₹49 is his investment. Quick, tell me. 15,600. We all are slow learners, sir. Slow and steady wins the race. What will this be? 0, 0, 0, 0. Only the premium loss. So what will this be? 0, 0, 0. Only the premium loss. What will this be? 0. Champak bhai. 0, 0, 0. Sorry, ₹100. I thought it would be 0. $15,900. What will it be? 0? Oh, I thought it would be 0. $16,300. What will 15,900 be? Yash bhai. I'm a seller of 15,900 in the money call. Avinash sir, how many lots? 2 lots. Minus 100 into 2. Minus 200. $16,100 plus 400. What else? Minus 400. 0, 0. $16,200. 500. Minus 600 plus 100. So can you see this? My loss is never more than the premium paid. Only in the middle strike. So from 15,700 to 15,900, again back. So this is 15,900. So now can you see my break even? 15,749, 16,100 minus 49. So now can you see this range? Is this clear in butterfly? So when will you make a butterfly? Range bound market. No, Champak bhai, in a butterfly, even if it is low premium, fine, but you must catch the range. Why? Because if you get to the middle of this range, that is where is your maximum profits. Middle of the range. Right? रोहित भाई वो आपको डिसाइड करना पड़ेगा. How to decide the range? You have to use your technical tools and your understanding. Right? That's why I say technical is an art and well is a science. For me, it could be an art. For you, it could be a science. So that you have to decide. Yes, bhai, both are different strategies. Short straddle, unlimited risk. Butterfly, risk is limited. Am I clear? Don't confuse strategies with each other. Every strategy has its own advantages and own disadvantages. Can you see the margin here? Very little margin. I can make a butterfly with only 50,000. Short straddle, I require 2 lakhs. There's a difference. I can hold this. I can go home, sleep peacefully. Because I know I cannot lose more than this amount. As long as my stop loss is not triggered, I know as long as Nifty does not close below 15,650, it's a very good idea. Right? Is this clear? Good. So welcome to the non-directional strategies, delta neutral. Theta positive, gamma negative, vega negative. Now my friends, whether I do a butterfly, oh, don't go with theory. Highest premium, this is going to be your highest premium, first one. This is going to be the middle premium. This is going to be the lowest premium. So if this is in the money, this can be at the money, this can be out of the money. If this is at the money, this will be out of the money, this will be far out of the money. Am I clear? Rohit bhai, you're studying too much. How many years did you study options before coming here? What was your experience? Good. Yeah, Vinas sir, please understand the probability is low because we are defining 200 points range, 15,750 to 16,050. So the market can easily go down. Markets can easily go down. Am I making sense?
Hello.
Good.
कल जब हम कह रहे थे तो
Good. Now I can make a butterfly with the call as well as the put. Let us, please, can somebody save this? Please post it back. Can somebody send this in the WhatsApp group? Yeah, range selection is important. That is the most important thing, Shivastav sir. You might expect 15,900. OP sir might expect 15,800. Everyone has his own chart studies. So there is no fixed rule. That is what the beauty of the market is. Please, can you click on this Greek and send a photograph? Yeah, Chapak bhai, you can do that. Sudhanshu sir, don't keep a strict stop loss, but keep a daily end of the day stop loss. If it is moving out of the range, say if it is going below 15,600, you need to exit. Yes. If it is going above 16,100, you would need to exit because you will not make money. Sir, वो 400-500 रुपया लॉस में निकल जाएंगे. Why pay this full loss of 3,700? Thank you, sir. Now, instead of this call, I'm doing butterfly with the same strikes in put. Instead of the call, I'm doing the butterfly same strikes with the put. I'm selling the middle strike 15,900. I'm buying 16,100, selling 15,700. Can you see the chart is the same? Can you see the PL is the same? Can you see the Greeks are the same? So when I use a butterfly with the call or the put, the payoff and the margins nearly the same. Champak bhai, nearly the same. So I can do a butterfly with the call or with the put, right? The result, if I'm using the same strikes, will be the same. Result, if I'm using the same strikes, will be the same. Am I making sense? +1, -2, +1. So now have you understood? Margins are the same, 49,000. So the margin of a butterfly, call and put will be the same, between 40 and 50,000. Right? Now let us come down to the next strategy, which is called the condor. How many of you heard this? It's a variation of a butterfly. Directional? No, it is a non-directional strategy. Limited risk, that means the risk is defined. But the profit, like butterfly, is also limited. So directional strategy, risk is low, profits are also low. Limited risk, non-directional strategy. It gives limited profit when the security is perceived to have limited volatility. It means that the security is perceived to have limited volatility. So you have to do this only on the weekly expiry like the butterfly, and you must know what is your expectation of the underlying closing at expiry. So what is the difference here? +1, you're buying a call. -1, you are selling one strike call, middle strike. Again, you are selling one strike. +1. So you are buying one call, you are selling one call in the middle, selling another call, and then buying the fourth strike call. +1, -1, -1, +1. So let us take it in the live markets. Same thing, same conditions like the butterfly, near to the expiry, weekly, range bound. You are not expecting big movement and you are expecting the markets or the underlying to close. So let us take a Bank Nifty example. You are expecting the markets to close, Bank Nifty to close at 35,500 and 700. So what are you doing? You're buying a 35,000 call. You are selling a 35,500 call. You're selling a 36,000 call. And you're buying a 36,500. So what are you doing? +1, -1, -1, +1. So how much have you paid? 422. How much have you received? 270. So you paid 205 rupees. But now can you see what is your range? So you bought a 30. Is it 412? See, my maths is weak, Ashutosh sir. So you paid 197, 195. So what is happening? Bought 35,000 call, sold 35,500 call. Now you have sold 36,000 call, bought 36,500. So now my maximum profit is in a range, not in a single point like that of a butterfly. Between 35,500 to 36,000, I will be able to hold the maximum profit. Again, it will come down. So what will be my break-even point? 35,195. And 36,500 minus 195. So can you see the range is pretty wide? 36,305. About 1,000 points. Can you see the range? Thousand points, 1,100 points, 35,200, 36,300. Am I making sense? It's a variation of the butterfly. Only the difference is in a butterfly you have one strike, so it is something like this. In a condor, the base or the peak is not there, it is flat. Wider the range, more the probability. Yes, I agree. So let us see the Greeks. Let us check the Greeks. This is a variation of the butterfly. Delta generally are neutral. Theta positive, gamma negative, vega negative. Can you see this? Delta positive, theta, sorry, delta is neutral, theta is positive, gamma negative, vega negative. Am I clear? So like the butterfly, same example. Only thing is max profit is between the 2 points, the second and the third strike. Please remember one thing. The difference between the first and the second strike and the third and the fourth strike should be the same. So can you see this is 500? This difference also should be 500. So can you see the profit is limited, loss is limited. Is it a good strategy? I would say yes, very good one. Right? Correct. If your range is bigger, your risk reward will be lower. Sir, दोनों चीज नहीं हो सकता. आपको 1000 पॉइंट का रेंज भी मिलेगा और बड़ा प्रॉफिट मिलेगा. दोनों चीज कैसे होगा दुनिया में? Not possible. In a butterfly, your range is lower. Your profits will be more. Very simple. Absolutely correct. Your strikes and you must be confidence. So are you now seeing the different things in the markets? Are you understanding this? Am I clear with this? Good. Always in the weekly expiry, you must know where the underline is expected to close. Let us see the Bank Nifty chart. Let us try to predict. Let us see what is the margin. The margins are close to 38,000, 40,000. So butterfly and condor between 40 to 50. Let us see the Bank Nifty chart. Can you see this? It is, we have got absolutely correct. If you are expecting Bank Nifty to be bullish, upper end of the range, so this trade is perfect. Perfect trade for a butterfly or a condor. Between 35,500 and 36,000. Lovely. So if it closes above this level for 2 days, I will exit this trade. If it remains, if it closes this level, what is this level? Below 34,809, I will exit. So if it closes below 34,800 or above 35,900, I will exit. So my exit points are also clear. Closing basis. Exit points are also clear. Closing basis. So, sir, these strategies will work in low volatility. That is why they are called non-directional. Right? They will work in non-volatility. Low volatility. Non-volatility is the wrong word. Low volatility. What is the IV here? IV is negative. अगर बढ़ेगा तो क्या होगा रोहित सर? बढ़ेगा तो क्या होगा? प्रीमियम बढ़ जाएंगे. अगर बढ़ेगा आईवी तो क्या होगा? ऑप्शन प्रीमियम बढ़ेगा. It will be negative for us. There is an event, this is negative. But if there is no event and the market remains in the range, I will get the benefit. In short, there should be no movement. Am I clear? In short, there should be no movement. It should remain in the range. If it remains, my delta neutral, I will make money in this theta. So what will happen? अगर ये 35,500 में बंद किया, this will be plus 500. This will be 0. This will be 0. 0. I will receive. Because by events are like results, RBI events, not TV events. They are called news. When you are sitting in front of the TV and watching, those are news. They don't create impacts. They might create for 10 minutes, 20 minutes, 30 minutes. So you don't need to focus on them. So those people who trade butterfly and condor, they don't react on intraday. They focus on closing basis only. Because it's a passive strategy. It's a passive strategy. It's not an active strategy. Am I clear? Yeah, war is important. But like small news that today there was a shelling, the shelling news is not very big. If there's a full-fledged war, yes. But if there is a firing happening, those are all local news. Impact for 30-40 minutes. Rohit bhai, before the war is declared, market falls. Once the war starts, market rises sharply. Am I clear? जिस दिन actual fighting चालू होगा, market बढ़ना चालू हो जाएगा. This is a condor. So maximum profit between the second and the third strike you are selling. Market is forward looking, Pramod bhai. जब वॉर चालू होता है उसका मतलब है वॉर खत्म होने वाला है. Right? The worst news are going to get over. Iron condor. Iron Condor, the last part we are going to do today. Limited risk, non-directional strategy is designed to have a large probability of earnings or small profit. When the underlying security is perceived to have low volatility and is trading in a range. Iron Condor can be visualized as a combination of a bull put spread and a bear call spread. Limited risk, non-directional option strategy. Okay, so what are we doing in an Iron Condor? We are selling out of money call, -1, higher premium. We are buying +1, lower premium, far out of money call. We are selling a out of money put. You're buying a far out of the money. Now currently Nifty is at 15,700. Avinash sir feels that Nifty is not going to cross 16,100. He feels Nifty will not breach 15,300 or 15,400. So what is Avinash sir doing? What can he do? He can sell the calls, short strangle. The 29th of expiry. He's selling the 16,100 call. So let us assume he's selling the 16,000 call. Because he feels 16,000 will not be reached. Right? And at the same time, he sells the 15,400 put. He has sold the out of money call and out of the money put because he feels it will not going to cross 16,000. At the same time, it is not going to cross 15,400. Short strangle. Rohit bhai, you are asking me how to handle this position in the live class. Remember? Rohit bhai, do you remember in the live class you asked me this question? I remember, you might have forgotten. Now the problem with this strategy, if it is going above 16,000 plus the combined premium, what is the combined premium? 133 rupees. So 16,133 unlimited loss, 15,267 unlimited loss. Right? It will have unlimited loss. Now, how can I do that? I cannot keep this strategy. Why? Because overnight gap down. Right. So what am I going to do? I need to cover these unlimited loss. So what am I going to do? I'm going to buy a lower end put as a boundary to protect. 15,100 put I will buy. Can you see now my loss on the downside is covered? But my upside I have not covered. So what will I do? I need to cover my upside. So I will buy a 16,400 call or a 16,300 call. Now can you see, my friends? There is a wide range. I'm making money between 15,300 and 16,085. My probability is more than 60% I will make money. Maximum loss is 10,000. My maximum loss will be more than my maximum profit. But can I see the range? 800 points. So again, the same principle which I did for the bull put spread. If it goes below 15,400, I will square off my trade. If it goes above 16,000, I will square off my trade. And if it remains between this area, I will make very good profits. Am I making sense? So this trade, my friends, I can keep for the monthly expiry also. Can you see delta neutral? Theta positive. Gamma negative, vega negative. So it's a range bound strategy. As long as it remains in the range, I will not lose money. As long as it remains in the range, I will not lose money. Because we are all out of money strikes. So theta is positive. Gamma negative. If the market gives extreme movement, either my strategy can be delta negative or delta positive. And if there is an extreme event or the Prime Minister addressing the nation, option premium will increase. Since I'm a seller, I will lose money. This is also a range bound strategy. A lot of people do this strategy when the markets are in the range. Like currently, the market is in a range. Can you see the chart? Is the market in the range right now? Absolutely. 34,500, 36,000 Bank Nifty. Nifty 15,500 and 16,000. Am I making sense? So this strategy you don't have to do in the weekly, you can do in the monthly also. As long as you believe that the market is in the range, you can trade this strategy. -1 call, +1 lower premium. -1 put, +1 lower premium. Iron condor. So these boundaries are very important. You remember the bull put spread, we did that. The boundaries are very important from where the maximum loss can start. This is where your loss starts coming. Your loss starts from these boundaries. So you have to be very careful. You have to exit moment it starts coming to those boundaries. Am I clear? Good. Yes, Avinash sir. How is it going? Ramakrishna sir. Have I bored you? Good. Let us revise once. Butterfly +1. Always Navam sir. All the payoffs are on the last day of the expiry. Whatever payoff graph I have shown you last day. Everyone, bull call spread, bear put spread, these are all last day's expiry payoffs. Butterfly +1. So how do I remember the butterfly? How many are you from Maharashtra? Anyone? Vada pav. Abhay sir, do you eat vada pav? Double cutlet. +1, -2, +1. Vada pav. So remember the vada pav. You will remember the butterfly. Is this clear? Weekly range bound. You must know the range. If you don't know the range, you are going to go trap. Right? +1, -2, +1. You can do a butterfly with a call or with a put. Condor +1, -1, -1, +1. How many of you have gone to McDonald's to eat a burger? Cheeseburger. So +1, +1 is the pav or the burger. This is the cheese, -1. This is the cutlet. +1, -1, -1, +1. Am I clear? Condor. How's it? Like this. A, B, C, D. Good. Iron condor. -1, call, +1, higher premium. -1, higher premium, out of money, +1, lower premium, far out of the money. -1 put, higher premium, out of the money, +1, lower premium. So we have done this, you remember? Bull put spread, you remember? Out of money, bull put spread. Wider range, smaller profits. That is condor. Wider range, smaller profits. So when you think that the market is going to remain there, you can do iron condor. So there is something called a cheat sheet here. Cheat sheet. Bull call spread. Strong momentum. Direction is bullish. Breaking important. Weekly resistance. Taking support. Delta positive. Theta negative. Gamma positive. Vega positive. Bull put spread. When IVP greater than 65, you're selling out of money puts. You're buying far out of the money puts. Delta positive, theta positive, gamma negative, vega negative. This strategy is to collect option premium when the IVs are high. With the strict stop loss of the underlying near to the strike price you are selling. Bull call ratio back spread. Delta positive, theta negative, gamma positive, vega positive. Unlimited profit, 20 days to expiry, position to be trade, big gap down, and the close of the day. You are selling a higher premium call, 1 plot, buying 2 lots. Maximum holding period 4 days. Am I clear? Butterfly, range bound market. Strategy to be done near to the expiry, where you are expecting to close near to the middle strike. You are selling options. So first call, highest premium. Second one, middle premium. Third one, lowest. Butterfly can be done either with a call or the put. The result will be the same if you use the same strikes. Delta neutral, theta positive, gamma negative, vega negative. Condor, range bound market, strategy to be done near the expiry. You are expecting the close near to the middle strike. Same like butterfly, delta neutral, theta positive, gamma negative, vega negative. +1, -1, -1, +1. So remember, the difference between the first and the second strike and the difference between the third and the fourth strike should be equal. Am I clear? Is this making sense? Yeah, how is it going? Great. So my friends, you have already mastered options now. Why? Because this was the toughest part. This was the toughest part. राजेश भाई वो तो देखिए थोड़ा तो टफ सब चीज लगेगा ही. Correct. So the more you practice, the more you revise, the more you will do well. So your homework is today to revise everything. Right? To revise everything. Right, and the last one, iron condor. When you're expecting a wide range, delta neutral, theta positive, gamma negative, vega negative. So all the neutral strategies that you see, delta neutral, theta is positive, gamma is negative, vega is negative. When you're expecting a wide range, maximum profit is lower than the maximum loss, but the probability is higher that the trade will remain in profits. So what are you doing? Selling out of the money call, buying far out of the money call, selling out of the money put, buying far out of the money put. So when you expect the markets to be in the range, right? So you have to define the range, right? Am I making sense? Right. I know a lot of you might be having a problem. Sir, how do I find that? How do I do a bull call spread? How do I do a bull put spread? For that, you need your technical knowledge. That options cannot teach you. That option strategies cannot teach you. Ramakrishna sir, if your view is for the butterfly, lower period. If you feel that for the next 20 days market is going to stay in this range, iron condor. But if you feel for the next 4-5 days market is going to stay in this small range, condor or butterfly. Longer duration, iron condor. Strict stop loss, iron condor, strict stop loss. Am I clear? Whenever a strategy you are doing, your maximum loss is bigger than maximum profits, your stop loss has to be strict. Am I clear with this? Is it fine? Correct. You need to prepare a cheat sheet so that you can remember. Yeah, so Anshu, everyone has to prepare his own cheat sheet. You want my cheat sheet? If you want mine, I can share it. But then your learning will be limited. Right? I will share my cheat sheet with you today. No problem. but I would want each and every one. Yeah, I will do that. But I want very good quality material made by you all. And everyone should make a cheat sheet and message show your homework will be making a cheat sheet for all the strategies. This is your homework. Revise and make a cheat sheet and share it with me. I'm sharing this Excel sheet. We have completed most of the program, right? Don't ask, my friends, why someone keeps hurting me. If someone is hurting you, don't ask. Ask yourself, why am I allowing them to hurt me? Remember, my friends, no one can hurt you if you do not want to get hurt. Avinash sir, what is it saying? Do not get hurt by anything. But be honest, be truthful. That if you are in the right path, you're going to get success. All of y'all, thank you for being with me in this session. It has been a great journey with you all. I have never seen a dedicated batch like this. I have never seen a dedicated batch. Just keep up this momentum. Don't forget not to revise. And we will have a wonderful next 2 sessions. Because the difficult part is all over. Now is all the easy part. See you Saturday. All the best. Say thank you to my family, your family, and others for taking out this time. And have a nice meal. Bye-bye. And fresh vigor next Saturday.